Howdy there, folks, and welcome into today's video. So we're going to take a look at the markets, what's going on. A lot of pain out there today, but mainly I want to react in this video to this article here, essentially, out of CNBC. So a veteran investment strategist, David Roche, says we are entering a war session, not a recession, a war session. So I want to read through that with you guys and kind of give my 2 cents on this. I think it's an interesting kind of take. I've never heard the expression war session before, so we'll kind of get into that. But yeah, at the start here, I want to take a look at the markets, stocks, things like that. As always, thank you FTX for being my official crypto partner. If you guys want to set up an account, go through my pinned comment and as your referral code, enter HolySmokas for that and actually get a free coin with your first $10 of a trading activity there, okay? So market's obviously rough here today. Hong Kong market was down 3%. NASDAQ ended up down over 2%. Another tough day for the NASDAQ. I mean, shoot, you get another week or two with this weak action in the NASDAQ. We'll be back to literally, multi-year lows for the NASDAQ, essentially. When the NASDAQ was really getting hammered there, I think we bottomed out at it was around 12.8, 12.9, somewhere around there. So shoot, I mean, you get a few more of these days, these 300-point drops, and we'll be there. It'll be a snap of fingers, right? The S&P 500 got destroyed today, about a 1.7% move there. Not even any massive news. Silver up today, which is interesting. I just started buying silver recently. I might add more and more to a silver position. If you go back, man, I don't want to talk too much about this yet, but if you go back to the 70s and 80s and pull up a gold chart or a silver chart, it was an interesting time period, okay? That's all I'll say about that. VIX was up quite a bit today, about a 15% move in the VIX there. If we look at something like a Voyager, down 6%. Tesla was down almost 5% here today. Year to date, it's down about 18%. Tesla, it was interesting. We had that exciting... obviously the Austin Gigafactory day, right? And the stock kind of moved up nicely into that, along with obviously moving up in terms of the market in general off those March 14th lows. And now here we are with, basically the stock since then has just been kind of down and out. So that's unfortunate, right? Chef's down 3%. Chef right around all-time lows, getting pretty darn close, like very, very close to all-time lows. Planet had a tough day here today. Facebook had a tough day, 2.6%. I mean, that one's just had an awful year, down 36% this year. For a stock like that, a cash flow machine, low PE name, just incredible. PayPal back under 110 again. That one's another one that's just had a horrible year so far. 43% year to date. That's just awful. And that's a great business model. It's a cash flow machine, not like an insanely high valuation, nothing like that, right? And, you see stocks even like that selling off so dang hard in this market. Honest didn't really do too much today. You did have a few green stocks out there, at least as far as stocks I own. STC was green here today. Foot Locker was green. Dropbox green. Beyond Meat green. Nordstrom, Corsair Gaming, Tapestry, and Oatly were all green, but there wasn't a ton of green out there. If we pull up some of my other ones, let's look at the banks today. So banks all pretty much finished red except for Wells Fargo. Deutsche Bank down 6.4% for Deutsche. Not a good day, obviously, for Deutsche Bank there. Big tech stocks. If you look, it's a lot of the higher growth, other than Shopify randomly just being up 2%. But look at NVIDIA, down over 5% today. Obviously, we just spoke about Tesla, down almost 5%. Microsoft, Mr. Softy got hit today, guys. That's been one of the few that's been holding up really strong in this market, and now it's starting to get hammered. Microsoft down about 4% today. And you look at this stock, it's down almost 15% year to date now. So obviously 4% of that coming today. AMD stock getting into some trouble now, down 35% year to date. AMD stock, right? Yeah, that's the thing. I think a lot of people, if you aren't super into the stock market, a lot of people think it's just risky stocks or just crazy valuation or crazy growth stocks. And you start looking at some of these and you're like, there's a lot of damage and a lot more than just those sorts of stocks, right? Google McDougal down 10% year to date. Apple's been holding really, really strong, only down 9% year to date. Now, usually that would be bad, but in a market where countless stocks are down 20, 30, 40% year to date, 9%, you'll take it, right? Mr. Amazon down about 9% year to date. Obviously, we spoke about Facebook had a tough day today. Adobe, Netflix down 2.2% there. Next one up, Cathie Wood stocks, as far as her some of her biggest positions. So ARK was down 1.3%, back under $60. Tesla, obviously, if Tesla's down big, that's going to hurt the ARK fund big time. Coinbase is a massive position for her now in the ARK fund, down 4.3% today. Coin, by the way, down almost 39% year to date, just awful. Teladoc Can't do anything right, essentially. That one was already getting hammered going into this year, so it's only down 28% year to date. Obviously, Zoom was down here today, and pretty much all our other big positions. This is like pretty much our top 10 biggest positions in the ARK fund. I just keep it there real easy. If you want to, KathyWoodStocks.com, that's the way you can track her top 25 positions on a daily basis and see exactly what she's making for moves there. Chinese stocks, kind of a mixed bag there. Baba's kind of been on a comeback recently, but it could give up those gains. There's some good news in relation to China being more open to letting U.S. firms really audit these companies, which I think is important. It was an interesting day in housing stocks. I was looking at this and I'm like, what? Like housing stocks were all green, but sometimes you can get a group to move, green on a random day like this. I just thought that was strange that all the housing stocks moved green on a very red day in the market here today. Rocket's now down to under $10, under $10 now for Rocket. That one's down 33% year to date. Just it can't do anything right now. But almost seems like a trick. When you see all the housing stocks up on a day like today, it almost seems like a trick, right? If we look at plant-based stocks, kind of a mixed bag here for plant-based stocks here today. The retail trader investor stocks, if we go ahead and pull up this, it wasn't that bad for some of these stocks. Like DraftKings was actually green, AMC was green today, Wish was green, Hood was green, Fubo was green. Obviously, you had some red. So it wasn't total devastation in retail trader investor stocks, which I thought was just kind of interesting. My stocks I'm watching, but haven't bought yet list as far as that goes, you're looking at this and it's like not some huge moves down, especially on a day when the NASDAQ was down, 2.2% or so. So it just kind of is more telling. Let's check out travel stocks. Look at this. Some of the travel stocks are green, and I think it's going to be, regardless of whatever's going on in the world, travel is going to be red hot this summer. I can promise you that. Okay, I mean red hot. But it's just interesting that markets had such a big downward move, but you can clearly see difference. That's why I like to break apart my watch list by different, watch lists, because you can clearly see why the market was down so much today. It was big tech. That's what drove this whole market down. It actually wasn't retail trader investor type stocks or smaller market caps. None of that moved the market. It was all these big dogs here today. All these 5%, 4%, 3%, 2% type moves. These things have the biggest weight when it comes to S&P 500 and the NASDAQ 100 as well, and the Dow as well. So that's what's going to be what moves the market. And clearly, it's a risk-off day in the market here today where folks just don't want to take any risk in the market. And a lot of folks have been asking me, like, when does a market go back risk on? Like, for real, right? Not like a little play around thing, but when does a market go, really risk on? That's a whole subject I'm going to have to talk in a video about. I have some perspective on that, on when I think the market will go risk on, and these stocks will actually start moving up. But it's kind of a little waiting game, and I'll probably dive into that. That's a really, really deep subject there. Alrighty, guys. So let's listen to this, or let's not listen. Let's go ahead and read this article here. The global economy is likely entering a war-cession, according to veteran investment strategist David Roche. And the markets are underestimating its duration, he says. Okay. It comes as a market's attempt to navigate a flurry of concurrent economic hurdles, including the Russia invasion of Ukraine, soaring inflation, rising interest rates, and supply disruption from China's efforts to contain the new Rona outbreak, which is like, weren't we over with that? Like, I thought this was like the year we were going to get over that. Then here we are with this still going on in China and shutdowns. And this is affecting negatively Tesla even. We pulled up Tesla. Their factories are closed right now over there in Shanghai. That could cause them to potentially miss next quarter's numbers. All this stuff matters at the end of the day, especially if you're talking about short-term stock prices. It is the type of stuff that can hurt companies quite significantly. I even heard about some cities are complaining about they don't have enough vegetables in China. Like, that's just a whole other situation, okay? Speaking to CNBC's Squawk Box of Europe on Friday, Roche, president of Independent Strategy, suggested that evidence of atrocities committed against civilians in Ukraine by Russian forces will prevent any possibility of a swift peace negotiation with Russian President Putin. Okay. As such, the West's only option is to seek regime change in Russia. Oh boy, that's going to be difficult. He said, given that Putin cannot be seen domestically to withdraw from Ukraine without a quote-unquote victory, right? They could still do certain things that could make it look like a victory. But anyways, he's not going to trade withdrawal for any ratcheting down of sanctions. So the sanctions stay in place. And I think the implications for Europe are that you will see recession. because the sanctions will actually increase and move toward a total energy blockade, Roche said. EU countries last week agreed to a suite of new sanctions on Russia in light of reported cases of, a lot of stuff in regards to civilians potentially over there, including a full embargo on Russia coal imports, right? In a time of mass global inflation that's going on, this stuff only makes it worse. That's just the bottom line. Like, it only makes it worse in the short term. No doubt about it, all right? Now, a rocket attack on a crowded train station in eastern Ukraine city on Friday basically killed a lot of people. It comes after Russian forces switched to assault on eastern Ukraine following their withdrawal from towns around the capital of Kyiv. Ukrainian officials have warned further atrocities are likely to be uncovered in towns recaptured from retreating Russian soldiers. And Roche argued that investors will no longer be able to separate politics from markets, which is something I obviously hate. Like, I hate politics. I hate all this geopolitical type stuff. I'm like, come on, man. Can we just get back to earnings and stuff like that? But we're in that we're in this sort of market that where this stuff is so forefront right now, right? There's an enormous supply side shock that will continue in food, in energy, in metals, and I can go on. This will go on for a while at the same time. We're dealing with inflation worldwide. We're dealing with rising interest rates. I think the 30-year Treasury yield will be at least 3.5% in a year's time, he says. Okay, the 30-year. And we're looking at, of course, supply disruptions in China due to what's happening with Rona, which people are not talking about. I think people are talking about it, but maybe not as much as this gentleman would like, but which are obviously another supply side challenge to the entire global system, right? Absolutely. It just messes up supply chains even more. And China has this insane, in my opinion, insane stance on Rona, where they just want to try to have like 0 cases. And it's like, dude, come on, give it up, China. But whatever, it is what it is. I don't run that country. It's just, when you deal with the, other countries, there's a lot that's out of your control, right? War-cession. Roche suggests that this will be too much for the stock market to overcome in order to continue to grind higher, and argued that historically high inflation will not fall off as economic growth slows, as would ordinarily be the case in a normal recession. In a normal recession, output and demand go down. Inflation goes down as well. Okay? In this sort of recession, a war-cession, you can actually have output which falls at the same time as costs and inflation rise. Oh boy, that'd be no bueno. Okay? You're seeing that in the mismatch in the labor market. You're seeing that in the price of commodities. And I think that will continue to push through. So you're faced with a very strange situation where central banks have to choose between their inflation target and growth. Investors have been closely monitoring central banks' comments to assess the likely pace of monetary policy tightening as policymakers try to contain inflation. But Roche suggests that any talk of policy rates going over the hump in the coming years is premature, he says. When the pain does become extreme on the output and performance growth side of the economy, of course they will slip back. But I think it's going to take a lot longer to happen to the equity markets assume, than the equity markets assume. Okay, so yeah, not a great situation, right? And obviously I think the market's looking at a lot of this because you just can't get anyone to take risk in this market right now, right? I look at the stock market and I see a place of people want to take no risk right now. No risk. I mean, 0 risk. And, it was one thing when, in kind of mid 2021, when a lot of the meme stocks and the hype stocks and a lot of the retail crowd stocks, when those were selling off, right? That was one thing. And it was like, okay, people don't want to take a risk into those sorts of stocks anymore. Those are all dropping like flies, right? But then it was another thing when all of a sudden toward the end of 2021, right? Especially in the fall time and going into December, when you start to see a lot of companies that actually have great long-term business models, and they're not just some meme stock or something like that. They have great long-term business models in front of themselves with incredible revenue growth opportunities in industries that are growing massively over the coming years, right? And you saw a lot of those stocks falling. And I was like, okay, wait, now it's not just some meme stocks. Now it's all these stocks as well. And then you fast forward into the beginning part here of 2021, when you've seen almost everything fall, right? It's not just even those stocks. Then it started even being the cash flow beast companies like a Meta with unbelievable profitability fall to the lowest valuations we've pretty much ever seen on PE metrics and everything, right? If you look at something like Netflix, Netflix trading at P's, we've never seen that before, right? Look at companies like PayPal, companies like Square, right? You start looking at even a lot of massive companies that are seen as safety stocks that have incredible balance sheets, cash loads to the sky, low P's, low price to sales ratios, trading at lowest valuations in like years and years and years, if not ever. And you've seen those stocks fall. You're even starting to see now Microsoft. Look at Microsoft year to date. We just looked at that one. Look at even Apple year to date. Look at Google, McDougal year to date. Even you start to have some of those companies now starting to fall apart. A lot of those companies are now down double digits. And we don't know if there's an end in sight, right? What if they report a troubling quarter? Those stocks could easily go down even more. And keep in mind, if you're really thinking about like the entire market really getting hitting in terms of like the S&P 500, the NASDAQ and things like that, the last shoe to fall, that would be if Apple doesn't quite hit some numbers this upcoming earnings, or Microsoft doesn't quite hit some numbers, or they got some worrying commentary, right? Some of those companies report it more toward the beginning of February, and some folks look at, things have gotten worse since then as we went throughout March. And that's a whole other debate. We'll see. But I can tell you a lot of those companies have been kind of like the ones holding this whole show up and making the S&P 500 and the Dow look better than it really is, right? Now, oil and gas stocks have been holding pretty darn strong, but does that continue on? A lot of that's dependent upon, this kind of hype cycle we've been in terms of commodities and specifically around oil prices, right? And we've even seen some of that start to falter. And so if you start to lose the oil and gas sector, right, the energy sector, and that starts to maybe fall apart a little bit, then you're in real trouble when it comes to S&P 500. Then you're in real trouble when it comes to all the big indexes in general, and those can start getting hammered a lot worse, right? We've already seen this year the Russell and the NASDAQ go into bear market at the same time, meaning they were down 20% plus from their highs. Like I said, if we had a couple more trading days like we do today, we're already back down to bear market on those, right? And if you think about the S&P 500 going into bear market and the Dow going into bear market, you have to get those big dogs to get hit as well. And the only way those, in my opinion, will get hit is if those start to report any sort of troubling numbers here and there, worrying commentary on the conference calls, then all of a sudden you get the next leg lower, right? And those babies fall as well. Now, with that being said, for a lot of folks that maybe own some of the smaller cap stocks, if those stocks fall, it doesn't mean those stocks are going to get devastated in terms of your smaller cap stocks. Because you look at a day like today, right, where you see an Nvidia down 5+%, and you see, Apple get hit, you see Tesla get hammered, and you see a lot of the big dogs get hit, and yet you looked out at a lot of those retail trader investor stocks, and you looked at a lot of the smaller cap stocks, and yeah, there were some red, but there were also some green, and so some of those stocks actually held up pretty decently well. So just because, let's say the NASDAQ, let's say the S&P 500 fell 10%, it doesn't mean retail stocks are going to get necessarily devastated more. You could even simultaneously have a situation where S&P 500 stocks get sold off heavily, right? A lot of these big dogs fall, and you could simultaneously see smaller caps actually start to rise in that sort of market, because that's usually a signal that you're getting very, very close to the bottom, essentially. And so money starts to rotate to some of the smaller cap stocks, kind of on the DL where nobody's paying attention. Everybody's all caught up into, wow, look at what Apple stocks just fell. Look at how much Microsoft's down. Everybody's so caught up into that. That's the talk, right? And meanwhile, you can start to have small caps kind of rally on the DL on the back of that, right? Because that's the last shoe to fall. When that falls, there's nothing left at that point. Then everything's fallen, and then you're kind of at a bottoming out period. Now, the bottoming out period, that can last weeks, that can last months. You never really know how long it can last, right? We've seen it before where that takes some time to kind of work through. But you can kind of get this funny cycle where you actually see smalls move up on the DL. We'll see what happens with all that, guys. Let me know your opinion in the comment section. I'd love to hear from you guys as always. Hope you enjoyed me kind of sharing my opinions and perspectives on this. Don't forget to smash as always, and check out FTX. The pinned comment down there, or it'll be the first link in the description, essentially, if you want to sign up for FTX and you basically get a free coin with your first $10 of crypto. You never know what coin it could be. You never know. Maybe a Bitcoin. Bitcoin lost some value. I saw that. Under 40K right now. We didn't even touch on that. Much love as always, guys, and have a great day.